I made an earlier video about my 4 vacant rental properties and having to drop my rent by 30%. And after watching that, one of you asked me to do an update a couple of months later. So here it is, the completely transparent update on what's happened since then. Right now, 3 of those 4 properties are rented, but one is still empty. And since then, we've had another property go vacant. So in this episode, I want to share what worked, what didn't work, and what I've learned along the way. If we haven't met yet, my name is Chad Carson. You can also call me Coach Carson. And on this channel, I teach you how to use real estate investing to achieve financial freedom so you can spend your time doing more of what matters. And this is part of a series called Coach's Corner that's a little bit more informal, where I share something that's on my mind. And this particular topic, where I share transparently what's going on in my rental business, is something I actually do a lot inside my private community called Rental Property Mastery. Every month, I show behind the scenes of what's going on, what I'm learning. And so if you're interested in more of this, go check out coachcarson.com/mastery. We actually just recently hit our cap of 300 members, but every month we have a few spots that open up. So if you're interested, definitely apply, and I'd love to see you inside. So as I said earlier, one of you suggested this video. And so I want to thank Aculus1, that is the person's name who made this comment. And they said, please do an update on what happened and how the market looks for next year. So thank you for that comment. And thank you all of you who leave comments. I don't get to respond to every one of them. I try to, but I do read every single one. So thank you so much, especially when you suggest future content. So I want to give you an update on these 4 rental properties that I originally talked about and just show you what's happened since then. So this first one is a single family house. It was originally, we were asking $1,900. And just a little bit of a nuance here. I'm in a college town. And so we have an advantage actually built in, where even though the lease ends in July of every year, we start leasing these properties, trying to market them in March, April, in some cases a little bit earlier of that year. So we have a lead up time when the current tenant, the old tenant, is still in there when we're marketing the property. So that usually means we can tell what's happening and whether we need to adjust things. I'll give you some feedback on maybe how we could have done that a little bit better this time. But since March of 2025, we've been asking $1,900. This was actually the same rent we were getting from our prior tenant, so it didn't seem unreasonable, and the trends were moving that way. But as you can see, things have kind of changed in this year. So what we've ultimately rented it for is $1,595, and we have gotten this one rented, and it was rented on October 10th. That's when the person moved in. So if you look at the total amount of vacant days, we had 8/1, so August 1st was the first day we weren't getting any rent, and we had it empty through October 10th, so about 71 days of vacancy. The second property we have here is a 2-bedroom, 1-bath apartment. So it's part of a fourplex. If those of you who watched my channel for a long time, you might recognize this is my original fourplex that I used to live in, unit number 2 here. So this is my original house hack back in 2004 when I was just starting the business. Still own the property. It's been a very good investment. But we were asking $900, which is actually what 2 of our units are rented for. And it seemed to also be the trend. And we had to lower this rent a little bit less than our house. And I'll give you some kind of overview of why I think there's differences between these properties. But we've ultimately rented that one for $800. So we had to drop it $100 in that case. It was vacant from August 1st through September 18th. And because we're in a college town, that's right at the beginning of the semester, which is another challenge in a college town. If you miss the window when the college season or the semester starts, it gets a lot more difficult to rent properties, at least ones that are focused on college student rentals, which this particular one is. So that one was vacant for 49 days. The other one was vacant for 71 days. The other 2 units are actually in the same triplex, and all of these are in a little bit different locations. The single family house is right close to an elementary school in town, so it's a little bit more the residential area where families live. This 2-bedroom, 1-bath is on the bus line. It's about 1.5 miles from campus, and I try to typically rent. This is kind of our typical one, this fourplex. It is a more affordable college student rental. So in our college town, the per bedroom rentals is kind of how we look at it. And there's some that go anywhere from $1,400 to $1,600 per bedroom. That would be kind of the luxury, high end of the market, best location, best amenities, A-class property for college student rentals, all the way down to some of what I rent. This is a 2-bedroom, 1-bath. Many times people rent it by themselves, but you do have some roommates who rent it together. So if you rented this by the room at $800, that's $400 per bedroom, up to maybe $450 per bedroom. That's more the range we're typically in. So we have a lot of properties like that. Most of those are full. So that kind of shows you something about the way the market's working right now. The one exception, we have a couple properties that are in the area, closer to downtown, closer to campus, which typically means that's a better property. But we're also competing with a lot of the new student apartments that have been built. So there's kind of a, layers of the market. And so the more luxury part of the market, you have to outcompete the luxury properties with better luxury. And ours is a little bit older. It has a nice amenities inside. It's a good location, but it's just not quite as competitive in this case. And there's some things we need to think about. How can we make this more competitive? I had a recent episode on college student rentals with Will Gaston down in Columbia, South Carolina. This is probably one and that I need to talk to him about. Like, how can we position this property and maybe even go really niche where we, decorate it really interestingly, have a unique design, maybe build a really amazing fire pit or something like that that's more entertainment based. This one's just, we've kind of gone with the strategy we have on our lower end rentals with this a little bit more luxury. And we're kind of not either one. We're not like really great luxury or really affordable. So we started off at $1,440 asking rent, which is also about right. But was what we've been renting it for the last few years. And with a little bit, we upped the rent a little bit, but we lowered our rent pretty dramatically to get these full because we knew that window was closing on the student, beginning the semester. And these are definitely student rentals here near downtown. And so that one, we got one of them rented for $1,000. The other one is not rented. And I think the difference, this one that did rent is the end unit. So there's 3 units and there's one in the middle. The one in the middle is the one that's not rented, is not quite as attractive, has fewer windows than the other one. So I think it's just not as good of a unit. And I think one of my lessons in that, this one took 42 days to fill up. So about the same as our 2-bedroom, 1-bath, because we acted pretty fast and dropped the rent. This one's still not rented. I think we missed the window, and we probably should have lowered the rent. This one, if this one was 1,000, this one should have been at least 950, maybe even $900 to show that those are a little bit different and maybe attract a different tenant. So that's kind of the overview of what we're dealing with. I did want to tell you though, and this is how things happen. In the middle of all this, we had a new vacancy. So we have a house that's actually right next door to this single family house. So same kind of neighborhood, family area near the elementary school. It is on a little bit of a busy road, so it's not quite ideal. No property's perfect, but good location, well laid out house, nothing fancy inside. But we had a tenant who had renewed their lease from August 2025 to July 2026. And their life changed. They decided they were going to buy a house or something. Something happened. And they've been asking us if they could move out. And we, of course, know that, we have all these vacancies and it's not, they signed the lease. They need to stay with it. But there was basically some conflicts with them. And without getting into every single detail, I kind of summarized that in saying they started complaining about things about the property, saying that these things weren't fixed or this is always a problem. We are pretty sure that we've responded to every single thing, and not perfect landlords, but there was kind of the accusations that were being made were not exactly how they were making them. But I made a choice that rather than anytime you get in a fight with someone, the fight ends up being a legal fight. And I didn't want to go that direction. I just decided, I don't want that in my life. I don't want to have to deal with that. We just said, if you move out, you're going to lose your security deposit. Just move on. And so they were also complaining about the fact, which is real, that we were lowering our rent on this property to $1,595 right next door. And they were trying, the story before this was they were trying to rent this out to find a subleaser so that they could take over the lease. And we were okay with that. We were going to give them permission to do that. But they were trying to ask $1,725, which is what they were paying. And we were next door renting it for $1,595. So it was difficult for them to find a subleaser. They got frustrated and we decided to part ways. So we have this property back. We got it back on October 19th. So I'm recording this on November the 3rd. And so we're doing a few cosmetic repairs, like the bathtub. We're going to refinish it. We just found a few other things that could help the property out some. And so we're going to do probably spend, let's call it $1,000, trying to do a few things to make it a little bit more competitive. And I think we'll probably have to lower the rent as well. Whether we're going to get this rented in the November, December season I'm really doubtful. So I'm anticipating we'll have to rent this maybe in January when people are a little bit more wanting to rent, but you never know. I've rented properties in December before, but we're gonna have to be aggressive. We're gonna be flexible. The lease we're gonna be willing to do. Normally we do a 12-month lease. We're gonna be willing to do a shorter term lease. Hopefully 6 to 7 months to get back on our July schedule. That'd be the ideal, is to rent it through July 2026. So we'll give somebody a shorter lease. If somebody wanted an even shorter one, like a midterm lease, but they had their own furniture or something, we'd probably do that. We might up the rent some to have a little bit higher rent. but we're going to be more flexible. We got to be, negotiable in order to get this full. But this is kind of the thing that happens, right? Is like you have to make hard choices about how you're going to deal with this problem. And sometimes when it rains, it pours. That's the way it seems, at least. When maybe the tenant anticipates that this is not a great market, and they know they have a little bit of leverage, and that's just the way it is. And you gotta just deal with it and move on. And that's what we're trying to do as well. So in just a moment, I'm going to get to some takeaways that I hope will be helpful for you in your own markets if you're dealing with some of this. But I wanted to share just a kind of zoom in on the strategy on one of these particular properties, the single family house, to show you how I approached it. Now, I'm not the only way to do this. I'm sure there's other people who might take it differently, but here's how I thought about it based on 22 years of experience and having to deal with this a few times in my career. So when you know that things aren't working, and you should know this, by the way, because you're studying your lead generation, funnel. So I knew things were a little bit different because when I asked my property manager, and all these are managed by property managers, by the way, although I used to manage them myself, so I had kind of experience with this, is there's a funnel basically where at the end of the funnel is a leased property. So you have a lease sign. That's really what you want. You want a good, qualified, long-term tenant who signed the lease. But at the beginning of that, you have impressions, which are any marketing you're doing, whether it's old school signs, or in our case, it's more online advertising. So if you're putting it on Zillow, if you're putting it on all the different websites, if your property manager has their own website and funnel of people who are looking at it, you want to know how many people are looking at or interested in that. Now, usually there's some different names, like a name card or some kind of interest. Somebody expresses interest in it. It's like, and you can think about that as a lead for someone who wants to rent your property. The next step is how many showings have you had? So if it go, typically if somebody's in town, if they're out of town, they might have to do a virtual showing, but they're interested, but they want to know more. And so they go look at the property. So we want to track how many showings you're getting. And then number three, you want to track how many applications you're getting. Now, every one of these stages is called a funnel because you have more people in the first stage. You have a lot of impressions to get to less showings, to get to even fewer applications, to get to a lease. And you shouldn't be approving all your applications, right? You want to have, there's going to be some people who are not qualified, whose credit or rental history or income doesn't qualify. So you're going to have to deny some of your applications based on your written tenant screening criteria. Hopefully you have those, but eventually you get to a lease as well. But what problem I found and how I identified this is a little bit different is we weren't getting enough impressions. Typically you have a lot, a good number of impressions, dozens, hopefully maybe hundreds in a week. And you should have at least a few showings a week. If you're not getting any showings, though, we weren't getting any showings. It was like for a whole month or two, maybe one showing. That is a big, big problem. Something's wrong. You got to change it. And so my strategy was, before that we changed the pricing, number one, let's inspect the house. And I made a list of some things I wanted to do, and I was a little late to the game in this. I was a little bit lazy. I should have gotten there earlier, back in April, May, when the old tenants were in there. But it's a little bit more inconvenient to make an appointment and go see it. But I would have seen things like this window, this screen is all torn up. This is on the front of the house. Like, first impressions, looks really bad. Like, just replace the screen. Not that expensive to do. There was some cleaning of cobwebs and things on the front porch. So the place just didn't look like pride of ownership, and that's on me. That's my responsibility as a landlord. It's my responsibility for informing my property manager that's the kind of thing I want to do, because some owners might not want to fix that. They're kind of cheap on those kind of things. I'm not. I think those things matter a lot. That's part of your marketing. We also noticed inside there's some cracked ceilings. This is an old property. It settles here and there. Maybe and historically there might have been a little moisture issue or something from a roof leak back in the day. But we've had this crack that's gotten worse in the ceiling. That could be fixed. And we also didn't paint a couple of the bedrooms during a turnover. That even if we paint one wall, we use the same color over and over again. Should have painted that wall because, yes, that doesn't cost a lot of money, but that is a big deal to me too. So those are kind of things in my protocol that I didn't follow up on. And when I inspected it, I gave the instructions that I'd like to fix those things. So that's one thing I spent a little bit of money on. Marketing wise, we didn't change anything. We continued marketing online, continued pushing it, mainly online, but also put up a sign. And then pricing was the big strategy. When we do all those things and we're still not getting the impressions and the showings we want, then I get really aggressive with the pricing. And I know some apartment complexes use incentives, like maybe they'll give you, free, computer or Apple phone or something. They say, instead of me dropping the rent by $300 for the next 12 months, I could give them something tangible. I don't really play that strategy. I think maybe it works for some people. I think people look at the price, and that makes a big difference. And especially with marketing, and there's too many properties on the market, they compare you with other properties. So here's what we did in March 2025. We had it listed at 1,900 bucks. Here it is in July. We had it at 1,900 bucks. We hadn't changed it at all. This was a mistake I made. I should have been paying attention to this stuff a lot earlier, and we should have dropped our rent earlier. Yeah, I was late to the game noticing this, and I wouldn't have had all these vacancies if I would have paid attention sooner. So another kind of strike on me. This is me kind of being lazy as a landlord, just being fat and happy. And in July, though, we did lower our rent July 31st to 1850, 50 bucks. Didn't make a big difference. So and I put it on like a week or two cadence. I told my property manager, I want to know how many impressions we're getting, how many showings we're getting, how many applications every week or two, and then let's make decisions. And so we kept lowering it. 1795 in August, August 20th, we lowered it again. Like 1 week later, we lowered it at 1695. 2 weeks later in early September, still no progress. Then we made a big jump down to 1595 on September 16th. And that was the one that got us a tenant. And so that we had to find the market. There is some place in a residential market like this, there's some price where people are going to rent your property. And that's ultimately what we found. We actually got 3 applications whenever we lowered it that price. Amazing, right? Like there was a price that other people were renting their properties at, and we had to match it and find that. So that is the strategy we took. I'd love to know in the comments if some of you use a little bit different strategy, but that's the way we did it in order to get all 3 of our properties rented. Now, there is one more fact you might be asking yourself, like, you still have one not rented. Like, what's up with that one? And I mentioned earlier, I think I could have dropped that a little bit earlier. And so I am going to drop it some to try to get that even more competitive. But I also know just from this market, this is a pure college student rental. There aren't a lot of people who aren't who are families or just people who live locally who are going to rent this. This is in the middle of the downtown area. It's kind of hard to get in and out of. So people love living there if they go to college. They don't if they don't go to college there. So I think we're going to have to wait till January perhaps to get a good tenant just based on historical data. So this is just something to know. When you have seasonal rentals, college student rentals are seasonal, short-term rentals are seasonal. There are other rentals that sometimes are seasonal. You just got to know that you have to make it happen during the renting season. And if you don't, you might miss a window. You might have multiple months of vacancies. So that is what happened with that one. So now that you know the facts, what actually happened and what my tactics were to try to get our properties rented, and I'm still trying to do to get our properties rented, I wanted to watch a little bit of game film. And this goes back to my football days when I played college football. Anytime you played a game, you would evaluate how you did in the game and try to improve. Some things you did well, some things you could have done better. And so I want to give you kind of a self-assessment. Feel free to give me comments and let me know if you think there's other things that I missed. But the first thing, as I mentioned earlier, you got to move fast when the market is changing. And I was not paying attention. I mentioned that I just kind of, I'm used to our landlord, our property managers getting things rented, and I just wasn't paying enough attention. And I should have done some of the things I ended up doing aggressively. I should have done those sooner. If I had done those things sooner, I think we would have minimized some of the damage. We would have been aware of the market. We would have adjusted to it. And really, I've been paying attention to other landlords on the market. There's still people sitting there with their old rents at 2,000 bucks, 1,900 bucks, and they're not paying attention. They're not lowering it. They're kind of stuck on the past. And so maybe you found yourself there. I was definitely there, either through laziness or through kind of wishful thinking. You got to move fast. You got to adapt. The market changes quickly. You have to change with that. The other thing that has just been reinforced, I've found this so many times in my career over the last 22 years, is that when you have the right price, especially with residential rentals, this is one of the reasons I like residential rentals compared to commercial. When you have residential, if you're in a good area, which Clemson still is a good area, at the right price, it's almost like turning on a faucet, and you will start getting leads and showings and applications for your property. It's amazing. Like if you look at a graph of 0 showings, 1 showing, 0, and then all of a sudden you get to the right price, 5, 10 showings, like turning on a faucet. And so my suggestion to you, and what my strategy is at least, is to lower your rent to find the market when things are changing like that. Assuming that you've checked everything else out, your property's competitive, it's clean, you did some of the work, the things that I needed to do to get my property showable and marketable. Assuming you've done all that, then lower the rent, but don't lower your standards. And so the standards are your tenant screening criteria. I would rather lower my rent. Sometimes it's tempting to keep the rent the same and just take somebody who's really wants the house. They're kind of desperate to take the house. They're desperate to take the house at the higher price because they're probably not going to pay you. They don't have the wherewithal, the financial wherewithal to pay it. And that doesn't mean they're not a good person, but I have run into a lot of problems in my own history of trying to reach for that rent and lowering my standards on credit or some other thing that I know is going to make a difference on whether they're going to pay me or not, instead of just lowering the rent and getting a good tenant who is qualified. So that is what I learned again after this experience. The other thing is just personally, you got to try to do the best you can to stay calm, to think critically, to think creatively, and just to keep trying. It takes a persistence sometimes. If you start panicking, if you start getting tight, this is like I played athletics. If you get in a big situation in a game, if you get tight, you're never going to do what you need to do to make a play. Or if you're a sprinter or some kind of runner, you can't get tight. Your muscles get tight, then you're going to not perform at your best. So this is equivalent. You got to stay calm. Your biggest asset as a landlord is staying calm. You got to think. You're a thinker. You got to make sure you solve problems like a puzzle, and you can't do that if you're uptight, and you can't do that if you quit. If it's going to be tempting, if things feel bad, to go and say, this is it. I'm done. Let's sell this property, whatever. You got to keep trying. You got to be persistent. The people who make money in this business get through the hard times so they can get through and see the better days. And then finally, I talked about this last time, but it's worth saying again, what gives me peace of mind and the ability to stay calm. I would not have been this calm 15, 20 years ago when I first started. I have cash reserves and I have low debt, and it makes a big difference. It allows me to be less reactive, allows me to be less desperate to try to take that next tenant, whoever that is. I mean, I empathize with you when you can't go another month because that's a $1,500 mortgage payment or with all your expenses you're having to pay. I get that, but this is another reason to be a conservative investor, have cash reserves to help you through these times, have low debt to help you to not have the pressure all the time of these changing markets. Because most of the time when the market's good, leverage is fine. But when things get tough, like 2007, 8, and 9, the people who had no debt or low debt did great. And the Great Depression in the 1930s, the people who had no debt were awesome. They were in great shape. They ended up buying more properties. So that is a huge lesson, is that most of the time it doesn't really matter that much, but when things get harder, it matters a lot. I also had a few questions. Hopefully I covered most of your questions from the comments last time and what I've already covered, but I had a couple questions that I thought were good that I wanted to cover here now as well. One of them was, Chad, why don't you just change your strategy? You're doing long-term rentals. Why don't you do short-term rentals? Why don't you do mid-term rentals? Why don't you do something like co-living? And the short answer is, if things were bad enough, if the market changed enough, I probably would. But I felt that it was a better strategic decision to lower my rent temporarily than totally change the strategy, because I'd have to spend money on furnishings, for a short-term rental, mid-term rental. Short-term rentals in particular, the local laws don't work in any of these properties. The zoning for the properties only allow up to 25 days of short-term rentals by law. So I have to get a license to do short-term rentals. It's a separate license from long-term rentals. So it's a little bit of a hassle to do that. And in order to do it legally, I can only get 25 days. So that just really limits the amount of money. They call it a game day rental law. So a lot of people rent their houses out for football games. And so it makes regular old short-term rentals in the city limits of Clemson not work very well. If you go right outside the city limits, lots of people make money on that and do fine. Midterm rental was actually the one I was considering. I did a podcast episode with Furnish Finder with their CEO, and I thought about maybe doing that, like maybe promoting it to lease it without furniture and say, I'll furnish it once you come there. If it got bad enough, I think I might do that. But things worked out where we got it rented and I didn't have to do it. Co-living, same thing. We have some local regulations that don't allow more than 2 people who are unrelated living in one house. That's kind of a college town type issue. So, but over the long run, that is something to think about as well. So I stuck with my strategy because it worked, and I was able to adjust pricing and get it to work in the short run. The more important long-term question is, are college rentals viable over the long term? And I had some good comments saying, hey, enrollments are not going to be the same 10, 15 years from now. The market's changing. And I think those are valid concerns. And they're definitely something on my mind. I'm in a town with Clemson University, which is a big major public university. It's the top rated college in the state of South Carolina. So they have the highest test scores, the highest SAT scores, things like that when people come in. So it's in demand, and it is compared to small private universities. If I were renting the students of small private universities, I'd be worried right now because enrollment is a challenge for a lot of those universities. Clemson University, I study pretty closely the enrollment of the university. And I actually pick up basketball with someone who's in the admissions department, and just some stats there. I think they have 30 or 40,000 applications for, I don't know if it's 3,000 to 5,000 new students they approve every year. So a pretty big gap, and there's more demand than there is supply. And over the last 10 years, I graduated Clemson University in 2002. There were 17,000 students. There's now 25,000 students. And there's some pluses and minuses of growing the enrollment, but from a rental standpoint, they've been on like a 2% growth rate of the university over the long run. And based on budgets and what I see, that doesn't seem to be slowing down. I think there's a forward progress towards getting more than that, maybe over 30,000 students. So over the long run, that enrollment number is what really drives a lot of these rentals and a lot of the economics of the Clemson University. But over the long run, we got to pay attention to that. Does the internet change things? Does AI change things? Is it still viable to have in-person classes? I think it is. I think the network and the connections and the experience, and it's a luxury experience for a lot of people. There are people with money who are willing to pay for their kids to go to school. I still think it's viable, at least for the next 5 or 10 years. I'll keep my eye on it over the long run. So I don't think the long-term value of being where we are near this university have changed. But it's a good question. It's really the most important question to pay attention to. So as you can see, there's a lot of things going on there, but I'm not out of the woods yet. I have rented 3 of the 4 properties. We have a new property that's vacant. So the challenge is ongoing. I do feel confident that we can get through this, as some of the reasons I mentioned, because of where we are financially, cash reserves, but also there's just this knowledge that I have that you can overcome the challenges you're in. A big part of this is the community I'm a part of. I've always surrounded myself with other positive investors and entrepreneurs. It's one of the reasons I created Rental Property Mastery, was just to have both the psychological benefit of being in a group of people who are positive and who are encouraging, who are going through the same challenges you are, and also just you can get practical tips. So just different ways you can deal with these problems, different strategies. Sometimes you need feedback from someone outside yourself. So if you find yourself wanting that community of people, definitely check out Rental Property Mastery. I'll have a link below, coachcarson.com/mastery. And I also want to recommend my next video, which is all about the operations of how you rent your property. I talked a lot about the strategy, the big picture. I talked a little bit about tactics, but if you are someone who is either in this kind of challenge yourself, or you're anticipating wanting to get better so you don't have to be in the challenge of having vacancies, I think it's really important to understand the fundamentals of how to rent out your property, how to do it well, how to screen your tenants. And that's what my next video is all about, is 7 steps to rent out your house or your property. And this is for beginners or more experienced investors. It's a really popular video on my channel. I think you'll find it very helpful. You can check that out if you're watching on YouTube by clicking on the thumbnail above me here, or if you're listening on the podcast or watching on YouTube, you can click on the link in the podcast or YouTube description below. Thank you so much for watching. I'll see you in the next episode.